Yo guys, welcome back to the channel. Now in this video, as you can tell from the title, I'm going to be telling you guys how I pick my stocks and also how you can pick your stocks. Because one question I get asked quite a lot is that how do I pick my stocks? How do I know which company is the best company to invest in? On Instagram and TikTok, you guys are always asking me this question. So hopefully in this video, you finally have the answer. And I'm sure you guys aren't necessarily asking this question because you care about what I'm doing. I'm sure it's more to do with what you guys are doing and how you can use what I do to your advantage. So in this video, I will be telling you guys how I pick my stocks. Hopefully you can learn something from it and probably implement it to whatever you are doing at the moment. Now, the first thing I'm going to be talking about is that there are two main ways investors tend to approach the market. As you may or may not know, there are two main ways investors tend to approach the market, how they decide which stock they're going to buy. Firstly, it's called technical analysis. Secondly, there's fundamental analysis. If you've watched my video on how to invest in 2021, you may already have heard of this terminology. Now I'm going to talk about fundamental and technical analysis in much more detail later on in this video, but firstly, let's actually start off with the first stage of the type of companies I invest in, because the way I see it as different layers. The first layer is that I invest in companies that I use on a daily basis. For some reason, I just have this sentiment towards companies I use on a daily basis because of the value they provide me, because they provide me with such good value. For example, Apple, with my laptop, my phone, my watch, all these reasons, I just feel like I should invest in a company like Apple because I use them so much, and irregardless of the share price, irregardless of how they're performing, just because I believe they're such a great company and they provide me with so much value, I invest in them. And now I know that may sound a bit careless because basically what I'm saying is that even if Apple were performing poorly, just because I like the company so much and I use their products on a daily basis, I would still invest in them. Because that's just how I see it. I just think if a company is providing you with a lot of value, if you have that much belief in the company, if you do like the company so much, you might as well own the company as well. If you own all the products, why not own the company as well? Own parts of the company rather. So long story short, I invest in companies or products I tend to use on a daily basis. For example, Spotify, Snap, Apple, companies like that. Now next, this is when it gets serious. This is when I put the sentiment towards the side. This is when I actually want to get serious and do a lot of research, and this is where fundamental analysis comes into play. Essentially, when you're using fundamental analysis to analyze a company, you're basically seeing that the share price at the moment doesn't reflect the true value of the company. So for example, what you're going to do if you believe a company is undervalued, if you believe that the current share price doesn't reflect the true value of the company, you're going to prove yourself right by actually going deep into the company. You're going to look at their 10Ks, you're going to look at their balance sheets, their income statements, you're going to look at their gearing ratio, their cash flow. You're going to look at their annual report and actually go deep as to why you believe that this company is undervalued. So essentially, you're going to be paying a lot of attention to the quantitative factors of the company. Now, fundamental analysis is something that I decided I really wanted to do something because it's usually associated with long-term investors, because bear in mind, the real value of the company may not be reflected until a few years later. So fundamental analysis is usually associated with passive investors, people who don't mind holding the share for a very long time. And that's why they go through all that effort to dig deep into the company and try and see if they're actually undervalued at this point in time. And this is something I decided I really wanted to do when I read the book, The Intelligent Investor by Benjamin Graham. If you remember watching my video on the 5 books that changed my life, you'll remember that this is one of the books I mentioned. This is a book I would definitely recommend you to read if you're just getting into investing, if you do see yourself becoming a passive investor, a long-term investor, and you are unsure about how to analyze stocks, about how to pick stocks. It can be a bit tedious because the book is very informative, the book is very big, it's quite a thick book. So I will say you may be intimidated at the beginning, but as you go along, it will get easier to read. If you do want to get it, I'll leave the link in the description below, or you can also get a free audiobook. But moving on, that is essentially how fundamental analysis works. And guys, as always, it can be a bit tough, but you need to understand that this is what comes with it. And I'll give you an example of how I use fundamental analysis to my advantage. For example, there's this company called Stoneco, which I came across in May of 2020, so last year. And at the time I came across the company, the value of the share price, I believe, was about $20 per share, £20 per share rather. And if you go back, let's go back to about 1 year ago. And as you can see the drastic increase. But that's about, I found the share price, I found the company in about May of last year. And as you can see, it was about $20 per share. So I was like, this doesn't seem right. This seems like, as we all remember last year in May, we had a financial crash, we had the stock market crash. All the share prices went down because of, of the panic of the coronavirus. So I was like, surely this isn't right. Surely the company is better than this. Surely this doesn't reflect the real value of the company. So I went onto their investor relation page. By the way, you can do this with any company. You can just search the company and investor relation, and it should be the first link that comes up. And I just had to go through I went through their statements, I went through their profit and loss statement, I went through their balance sheet, their cash flow statement, and I just really I really dug deep into the company and actually read more about it. And I said, this is definitely not the real value of the company. It's definitely not worth $20 per share. At this present time, it may be showing as $20 per share, but I know that this is due to speculation, this is due to panic, this is due to all sorts of things happening at this present time. And as time goes by, the real value of the share price will be reflected. And now, I'm not a financial advisor, so I will not tell you to invest in this company without you doing your research. Like I said, guys, I may have been wrong. This may also go down in the future. God knows what's going to happen. But at this point in time, I did have confidence that, okay, I'm confident enough to invest in this company. I have done my research. I have read a lot about the company, and I believe this company will go up in the future. And as you can see right now, one share price is about $92. So I bought a few shares last year. I've received a significant return on my investment so far. And that's just an example of how you can use fundamental analysis to your advantage, guys. The research, the information, the knowledge you need is right there if you just look deep enough. If you just dig deep enough, everything you need to know about a company is right there in plain sight. Now, I do know that it can be hard for people to read balance sheets. It can be hard for people to understand the cash flow statement and stuff like that. But another thing you can do if you aren't too sure about how to understand balance sheets is to look at their financial ratios, look at their shareholder ratios, look at their debt to equity ratio, look at their dividend per share ratio. All these type of ratios, they will help you understand the company better. That is easier than at least looking at their financial statements. Other than this, you can also look at their 10K funds and their 10Q funds. This is something I spoke about in my previous video about how to invest. But essentially, it's just like an annual report about the company, a forecast about how the company is going to do. Matter of fact, I'll just show you a video now of what a 10K form looks like so you can have a deeper understanding about it. If you search Apple Investor Relations or any company for that matter that's publicly traded, it should be the first link that comes across. If you press it now, you can see it shows you pretty much everything about the company. But what we're going to do is scroll down, and now as you can see here, it says view the form 10K, the 10K form. This is what I'm always talking about, guys. So let's press view the form 10K. And as you can see here, it is a very, very, very detailed and informative document. It's almost like a book, you could say. And now, I'm not even gonna lie to you. Sometimes in fact, most times when I invest in companies, when I'm trying to invest in companies using fundamental analysis, I do not read the whole 10K form because this is very time consuming. Like, let's be honest. And in addition to that, there's a lot of information which is not necessarily important for me in terms of investing. There's some stuff that I would not necessarily think is important. But overall, the information in the 10K form can be very, very, very beneficial to you. For example, things like the company's stock performance. This is the type of information you will find on the 10K form. You probably wouldn't find this in your investing app. So these are the things that are beneficial. And this is why I stress that you guys should dig deeper when you're trying to find the companies to invest in. Don't have the fear of missing out. Don't just invest in the company. I know so many people who have lost hundreds of pounds, thousands of pounds that try to invest in GameStop. Remember, there's a quote I heard, by the time it's on the news, by the time the Wall Street journalists are talking about it, it's already too late. So don't have the fear of missing out. Don't try and see because something is on the news, oh yeah, I'm going to try this, I want to make a lot of money, because you're just going to be beating yourself up at the end of the day and wishing you had just, stuck to your gut. The issue of nowadays is that everyone wants to know what the hottest stock is that's going to go to the moon, AMC to the moon, SNDL to the moon, Nokia to the moon. People aren't actually doing research and analysis into these companies. They have the fear of missing out, and it's costing them a lot of money. And it's unfortunate because this information isn't that hard to process. It's not that hard to analyze. If you do take some time out of your day to look into it, you will realize that, it's better. You will feel confident, even if you've heard about it from your friend or you've heard about it on Twitter. Just doing that research will make you feel way more confident about investing in the company. So yeah, guys, that's really what fundamental analysis is all about. Now, moving on to technical analysis. Technical analysis, you could almost say, is opposite to fundamental analysis, whereby people that use technical analysis, investors that use technical analysis believe that everything regarding that company, everything about that company has already been reflected in the share price of that company. So investors using fundamental analysis believe that the real value of the share price is yet to be shown, and that in the future it's going to rise up, and they prove themselves right by actually looking deeper into the company's qualitative factors such as their debt to equity ratio, their statements, their financial statements, and etc. However, with technical analysis, the investors using technical analysis believe that everything about that company has already been reflected in the share price. So they believe that the news about the company, everything, whether the liabilities of the company are high or low, whether the assets are high or low, whether the CEO of the company is tweeting about the company or not, everything has already been reflected in the share price, and this is reflecting the current value of the company. So essentially, they try and predict signals, they try and identify how the company is going to perform in the future based on how the company has, based on the chart of the company. So based on the trend of the charts, if the chart has been booming, then they probably think eventually it may fall or it may continue to rise. That is essentially how technical analysis works. You don't go into much depth about the company as a fundamental analysis would. I don't really use technical analysis, I will be honest with you. I do use it from time to time, and it can be a bit riskier, obviously, than fundamental analysis. Fundamental analysis is more of the passive investing, where you just do your research and you invest in the company, whereas technical analysis is more of that day trading, swing trading type of investing. Now, to be honest with you guys, nowadays I'm looking more into index funds rather than individual stocks, because they're just way more stress-free. They're just, easier to do, easier to understand, the research in it isn't as time-consuming. You don't have to spend, a few days or weeks looking into the company and trying to, understand if your gut is telling you the right thing or not. With index funds, you just put the money into it and you let it do the rest. It's more of that passive investing. And I think that's something you guys should also check out. If you're investing in individual stocks are good, don't get me wrong, but also try and look into index funds and mutual funds as well. But yeah, guys, that really sums it up for today. I really did hope you enjoyed the video. As always, if you did enjoy the video, feel free to like, comment, and subscribe to the channel for more videos like this. Thank you for watching, and I'll be back again.